Hello, good day, traders. I want to welcome you to the year 2024. 2023 was an amazing year. We had a lot of fantastic analysis on this platform, which, yielded positively. And I strongly believe this year will be much more better than last year. So if you're watching this video for the first time and you're here to subscribe to this channel, just click the subscription button and also click on the notification bell so that you can be notified whenever I drop a new video. So I want to just quickly give us a little overview of what I'm expecting to happen to gold. So let's dive into today's analysis. All right, so on my screen now, I have gold. This is gold. I'll do a top-down analysis of gold right from the monthly time frame. So this is gold on the monthly time frame, and you can see that last year, the December candle closed more like a kind of a rejection candle. And I'll just zoom it, smaller this way. And I can comfortably draw a trend line up there to capture how price moved the pattern that was generated. And another one below here, this clearly tells us that a rising wedge pattern was formed by gold. Now, this is a monthly time frame, which is a very big one. So in the big picture, it means we're expecting a possible decline in gold because a rising wedge is a bearish reversal pattern, and more so that the month ended with a rejection candle. So technically, we're looking for possible bearish movement on gold right from the big picture, which is a monthly time frame. And the same now, if we go down to the weekly time frame, on the weekly time frame, gold closed as a rejection candle again, a pin bar, last week Friday, which also signified. Now, this one is actually very, very close, to this other candle here, which forms a possible resistance level and which could still lead to a possible double top and a decline. So you can see we still have a bearish outlook again. So from the monthly time frame, we have a bearish outlook, weekly time frame, a bearish outlook. And on the daily time frame, I'm seeing on the big picture, I'm seeing a possible shoulder, head, second shoulder, which is a head and a shoulder pattern, which could, let me use the word could, lead to a long-term bearish breakout on gold. So that reason why we're looking for a bearish breakout on gold. So meaning from the monthly down to the daily time frame, all we're seeing is just a bearish outlook on gold. So I'll zoom down to the 4-hour time frame. And on the 4-hour time frame, what I'm seeing currently is a formation of a head and shoulder pattern again, which in the short term could lead to, a bearish breakout. And in addition to that, I can also draw a trend line right here, which tells us that we have a rising wedge, which is equally a bearish, reversal pattern. So everything on all the time frame is telling us that we should expect a possible bearish breakout on gold. And if I draw the neckline here, you can see that currently price is approaching, the neckline of the head and shoulder pattern. Now I'm going to clean up everything. So if you go back to the daily time frame, we'll see here, yeah, I said we have the possibility of a head and shoulder pattern. However, we equally have, a kind of a pattern being formed right here. We have a key level right here. Price has bounced off, from this level multiple times in time past. And if price is able to drop from the head and shoulder up to this same point, two things: if it breaks that level, then that means that's what will lead to the final free fall, while this zone here is the neckline. So in all ramification, we're looking at a possible bearish breakout on gold. So I'll zoom down to 4-hour time frame now, which is close to what we're trading with at the moment. So I have a head and shoulder pattern, which I believe should price should easily break the neckline for a bearish movement. You can see that price is actually approaching the neckline of this head and shoulder pattern. And that's also in combination with a rising wedge. All right. So I'll go now to Fibonacci and look at projected profit taking level, for this particular setup. So all things being equal, if price is able to break out, below Fibonacci 23, you can see Fibonacci 23 just lines up with the tip of the neckline there. So if that becomes a proposed entry point, then we should expect a ride down to Fibonacci 50 to yield as much as about 294, pips, just on the round figure, 290 pips, and to 69, Fibonacci 1.8 should be about 400 pips. Now, if the volatility is very extreme, the price could proceed to Fibonacci 78.6, and that would be about 600 pips. So we have a projection of about 400 pips, on gold. Let's take it again from Fibonacci 50 is about 294, and to Fibonacci 1.8 about 400. So between 290 and 400 pips, bearish movement on gold. All right, so stay tuned to this channel, and I'll come back later to bring you the update on this trade setup. Once again, if you are here to subscribe to this channel, go ahead and click the subscribe button and also click on the notification bell so that you can be notified whenever I drop a new video. Now, you can also go ahead to drop your comments and your view on this analysis, if you're support of it or not, or if you want me to analyze any other asset, any other financial asset, you can drop that in the comment section, and I'll surely get back to you on that. All right, take care, and I'll see you again some other time. Bye for now.